Hello, welcome to the Stockout. This is your show at FreightWaves about all things related to the consumer packaged goods industry, the CPG industry, and now the retail industry. I am one of your hosts, Mike Baudendistel, here with Grace Sharkey. Good to see you, Grace. I'm going to go into, let's see, can you hear me, Grace? Might be having some technical difficulties. Okay, so if production can hear me, maybe just let me know if production can hear me. But I'll talk a little bit about, yes, what you see on the screen here is the way to sign up for the Stockout newsletter, which all you do is go to www.freightwaves.com/the Stockout to sign up for our newsletter. We do have about 20,000 people signed up for the Stockout newsletter, which we feel pretty good about. Would love to grow that. Send that out Wednesday or Thursday of each week, go through what's happening in the world of CPG news, retail news, how that relates to the various data points that we see in FreightWaves sonar. Try to relate those things, which I think a lot of it ties sort of pretty closely together. And with that in mind, want to go through the first news item we have today, which is General Mills results last week. One of the things that I that I went through last week. So one of the things I went through for the hold up. Grace, are you there? Can you hear me?
Yes.
Okay, you can hear me now?
Okay. Yes, there we go. I can hear you now. Happy Monday.
That's good. I'm not sure what happened there, but that's kind of the nature of doing everything from home and not being in the office right next to Isaiah and the group. But anyway, if everyone knows how to sign up for the Stockout newsletter, which they should know how to do by now, there's no excuse for not knowing by now. Going to our first topic today, which is General Mills results last week. We talked about this on the Stockout newsletter last week. Stock's been under some pressure this year after having a strong year last year. I thought it was kind of a boring quarter in that there wasn't a lot of variance from the published expectations. They reiterated guidance, but they did say maybe a few trends that I thought were interesting. That I think are related for the overall CPG industry. They did say that the pricing strategies that CPG companies are using are getting to be more sophisticated. They're getting to be highly collaborative, highly analytical, really, looking at on an SKU level, kind of, what's happening with volume in response to changes in pricing. So these companies really know how much pricing they can get away with. So they said that's been a change from the previous years. They mentioned that. They did say elasticities were rising. They saw volumes fall 2% on a 7% increase in price, and there was some mix in there. There you see the stock under pressure. This year that stock chart goes back to 2018. It went up nicely last year when there was a flight to higher quality stocks, and then this latest year, there's been some concern about CPG companies doing too many promotions. Also, some concern that people are just going to cut back on sort of some items and maybe go to private label. So some of the national CPG companies under a little bit of pressure from that. And they also said that consumers are starting to pull back a little bit on pet food, which is something I think was a little bit new. We've heard that's been resilient up until lately. And then service levels, they said, are back in the high 90s. So a lot of these supply chain issues that they have been dealing with, that they said were pretty unprecedented during the pandemic, a lot of those have really subsided. They did say that their costs are still rising about 5%. So there's disinflation there, but not necessarily deflation. So I think overall probably translates to higher on-shelf prices, but rising at a slower rate. And then gross margins improving some, increased 50 basis points year over year. The operating margin did decline 60 basis points because of higher SG&A. So the companies are getting some of that margin back that they lost during the pandemic, but not necessarily all at once. sort of getting it back gradually. I think we're going to see that from a lot of the CPG companies. Do you have any thoughts on what we heard last week
Yeah,
from General Mills or any of those trends?
it's interesting, like you brought up the pandemic related areas, right? We saw such a huge rise in spending when it came to pet foods, and I think just pets in general, right? Everyone stuck in their homes, investing in maybe some a pal to stick with them through it. But then we saw, I think, one of the most interesting trends in terms of the average consumer is in August, right? We saw this huge influx of individuals starting to pay back their loans. And for me, that was a real trigger that I personally think we're going to see the consumer starting to really watch those dollars and how they're coming in and what they're going towards. And if that means spending a little less and being more frugal with even how you're, feeding your pet and not overindulging and even going back from the luxury goods back down to maybe just your, in this case, normal cereal snacks, etc. I think this is showcasing that the average consumer rate is trying to find areas in their life that they can pull back a little bit, understanding that these costs aren't going to go down anytime soon. Right? They're not going to see somehow General Mills get back to its pre-pandemic levels. So, being more considerate of where they're spending, so that they can continue to spend in other areas too. If we get to, I think the Halloween aspect we'll talk about soon showcases a little bit of that, right? If we're gonna have to pull back in some areas and still enjoy Christmas, enjoy the holiday seasons, enjoy Halloween, we're probably gonna just be a little bit more conscious of how we're spending every single dollar when we head to the grocery store as well.
Yeah, speaking of costs that are not going down, topic number two, commodity prices surging for cocoa, sugar, and olive oil. Three things in particular. So that's the price of olive oil. That's up
Wow.
130% to a new record, up to $8,900 per ton in September. The previous record was $6,200 a ton in 1996. Say
Wow.
consumption is flat to down in every country, on the higher prices except Turkey, where the government has stepped in to limit exports to keep their own domestic prices down. You see that sometimes when commodities go crazy. And then there was this bizarre story in CNBC that reported 50,000 liters of extra virgin olive oil was stolen, worth about $450,000 in Spain in late August. Weird thing to sell, would be a hard thing to liquidate. So, olive oil prices surging, sugar prices at a 12-year high. Have a chart to that effect, where those have risen to a large extent there too. And it's not just sugar. I mean, we've talked about that in the past. That's sort of been rising steadily the past 3 years. Cocoa price is now at a 46-year high. Both of those things driven by a lot of these weather conditions. The cocoa, 75% of it's grown in West Africa, harvests in Ivory Coast and Ghana, being impacted by torrential rains, flooding, and this black pod fungal disease impacting cocoa specifically. So everything's going wrong that can go wrong. There cocoa prices highest they've been in 46 years, but the demand really hasn't come down much. I mean, here from like Mondelez, these are still sort of hanging in there, which goes to topic number three, which you brought to my attention earlier in the day, is Halloween spending is expected to increase. And the stat there from the National Retail Federation expected to be up 15% from this
Yeah.
year from last, 12.2 billion from 10.6 billion. So clearly part of that is higher prices for sugar and cocoa. Is going to translate to higher candy prices, of course. But then it also says 73% celebrating Halloween, up from 69%. Any other reasons, for this? It's not because people are having more children. I think they're having fewer children. There must be some
Yeah.
other reason for this.
Yeah, I think that is interesting. I was almost surprised. I remember covering this topic even last year and surprised even to see a 21 to 22 increase as we're just starting to get into seeing a lot of this inflation hit the shelves. I mean, I would assume a part of that total spending, right, is probably a percentage inflation, but still it's high enough that it is the consumer, I think, considering that they want to spend this holiday. I guess actually celebrating it. I agree with you. I don't think it's just more kids. It seems like adults in particular, right, are going to be spending a good amount on even their costumes, etc. We saw a rise in that over the past year. From, let's see, adult costumes went from 1.7 billion to 2 billion in spending projected for this year. The adults, I think, are taking their time to enjoy the holiday. You even have the pet side of things to look at too, and an increase in what you're spending on them. I won't lie, I actually bought some Halloween pet treats this weekend too. So I'm part of that stat, that's for sure. But I was, the consumer really shocks me, and sometimes I want to consider us, almost compare us maybe to other countries at this point, because we somehow keep finding the funds to celebrate these holidays. Where I'm sitting back and just considering, how much candy to buy that'll make the neighborhood happy enough. But it seems to me, and from the research that the NRF is doing, that we're gearing up for another record leading year in the holiday, which I'm struggling to wrap my head around. But if we're paying our loans off and we can celebrate Halloween, power to you, consumer. Go for it.
Yeah, the consumer's under pressure, but still finding a way to spend money. At some point, something has to give, it seems.
Yeah.
Um, with that, I think we should intro our guest. So today's guest is Bill Rinehart. He's the CEO of Bold Carts. And so do we have Bill? I'm going to ask Bill to explain his company rather than myself. Do we have Bill?
Sure. First of all,
There you
thanks for
are.
having me on the show.
Well,
It's a pleasure to
absolutely.
be
Yeah,
here.
thanks for
So
joining us.
Bold Carts is in, yeah. So Bold Carts is in the hardware space of the cannabis market, and let me explain what
Mhm.
that means. We sell the actual hardware that cannabis oil goes into for vaping. For instance, we sell the packaging. So if you were to make an analogy, the best way to look at us is we're someone that sells empty Coke bottles to Coke bottling plants, or empty beer bottles to beer bottling plants. In addition to that, we sell all the packaging that goes around it, whether it's 6 packs or the 12 packs or the merchandising materials. So that's the business that we're in. So we're really, the picks and shovels, if you will, of what is the cannabis gold industry.
Uh, I I was gonna say I have an interesting question. Clearly, I'm here in Michigan. I've watched products really evolve over the past couple of years in particular. I'm interested in vaping related products in particular, though, because we've seen a lot of design changes, a lot of course, people concerned with safety issues with them as well. From your experience, how quickly is vaping growing, and how does that compare, especially when providing different SKUs and products for all these labels? How do you go about creating the packaging and staying up with maybe the times and what consumers are hoping is a safer product over time too?
Well, it's a great question, first of all. And, the first thing we should probably do is, distinguish between, cannabis vaping versus nicotine vaping. We are not in the nicotine vaping space. We are strictly in the cannabis. But all the things that you mentioned are correct. You're seeing a massive shift from what we call a 510 cartridge threaded cartridge with a battery on it. And then when you're done, you unscrew the cartridge and toss it and buy a new one and put it on the same battery. We're moving rapidly from that solution to what we call an all-in-one solution, which is something that it is all in one. It's 100% disposable. There's no putting a battery on, taking a battery off. They're typically more space on them to advertise your brand. And so we do definitely see a shift. But what that's causing is exactly what you're talking about. Michigan's a really good example where you're seeing, market fragmentation. And even within a brand, there's many sub brands. And so, for us, it's good for us because it's just more more product that the customers need to order from us, people like us. But it definitely, I would think, is confusing for the consumer.
Yeah, I mean, I think it would be. I think the whole category, at least to me, it's confusing to the consumer. Can you talk to us a little bit about your supply chain? We focus a lot on supply chain here at FreightWaves. Saw on your website you manufacture in China. Would you source how many components are you sourcing in order to build those in China? And did you have issues with getting those products to the areas of consumption in the United States during the pandemic with the shipping disruptions and all of those things, or any supply chain disruptions, and have those been alleviated at this point?
Sure. So we made a conscious decision when COVID started that we would not do sea shipping. So everything that we do is air. So we've been much less affected by it than people that have continued to do sea shipping. It's obviously, well, maybe not obviously, but it's more expensive to do shipping by air. But we just look at that as a cost of doing business, and our ability to reduce our overhead is key to that. As far as the sourcing in China, there's anywhere, depending on the device, 11 to 15 different components that goes into a cartridge or an all-in-one, and those are sourced throughout the world. And we have not seen any problems with our supply chain since before or after COVID, if you consider we're after COVID, which we don't know.
Yeah. Uh, Going back to even the changes you just brought up as well in regards to the product, and in particular, it sounds like combining the vape into the actual product, being able to even put on customers a labeling, white labeling, etc. How does that go into the overall margin in order to? I think products over time have come, I'd say, definitely, as a consumer, more impactful, right? The design and structure seem a little bit more up to date. But I would consider in that fact too, right, that prices is probably going up with that packaging as well. How do you work with the companies, your customers, to make sure that the margin and the pricing continues to stay viable for the end consumer at the end of the day?
Yeah, really good question. And I guess as a backdrop, on top of that, you add the fact that every state has its entire own rules, its own pricing, its own regulations. And so you throw that as a backdrop. What's really driving, or one of the things that's driving the shift in devices from what I call cartridges to all-in-ones, is a difference in the actual product itself, going from what we call distillate in the business, which was the first generation oil that goes into the carts. And then as you move forward, there's what's called rosin, live resin, and different products, and they have a different characteristic on how they're consumed and how they're heated and what temperature they need to be at in order to vaporize. And that is really one of the big drivers on the customization aspect of the industry.
Yeah, I mean, you
also see a
you
much
mentioned
different. You see a different price point too.
Yeah.
yeah. Yeah, one thing I thought was interesting, I mean, sort of related to that, is you say on your website that you're able to keep, your manufacturing, is at a way that you can keep the cost down for your customers, and you also mentioned that your products are highly customized for the specific customer. So it's almost like you're doing, they're coming to you, they're getting a product that looks very much like, they designed it from sort of the ground up. How do you balance having a product that's very customizable for the consumer while also keeping your manufacturing costs low enough that it supports your customers' margins?
Yeah, good question. So there's two aspects to that. Number one, the customization. There's two types of customization. That is putting the branding, the customer facing branding on the device, and that's a very easy, inexpensive thing for us to do, both in China and the U.S. The customization we're referring to on our website is really about how that specific device works for that customer's oil. And so we will make changes internally. The consumers can't tell the difference between something that will make a great experience for distillate versus something that'll make a great experience for live resin. That has to do with air intake holes, things like that are not customer facing, if you will, but they're super important. And the way we keep our costs down is, age old answer, volume. It's very difficult to provide, one offs for everyone. And so we have enough volume where the oils are similar enough across the board that we can dial it in for all of our customers.
I'm interested. You touched on this lightly as well. Different states, different rules, regulations, which in my head would make even like warehousing products, etc., be awfully tough to maneuver through. Can you tell us what your fulfillment process looks like? I mean, some of the challenges that you've had growing the company and able to provide all these markets, but also make sure that regulations are being met as well.
Yeah. So when you look at the regulation side, I'm really referring to the cannabis companies themselves. We don't
Yeah.
operate under any regulations. We're not licensed, et cetera. But it is a good point. We warehouse everything out of Arizona currently. So it comes from China to Arizona, and then we distribute from here. We haven't had any real problems at all to speak of within the U.S. The only challenges were from China, during COVID, which I explained before. We just said, let's put everything on an airplane and try to minimize that as much as we can. But when I mention the differences in the different states and the regulations, it's to the point where I'll just use some examples where Missouri, let's say that they sell 1 gram cartridge for $75.
Mhm.
That same cartridge might be $12 in Oklahoma.
Yeah.
And so it's really hard for these companies to navigate, which states do I want to operate? Which states am I allowed to operate in? And how do I figure out how to make money if I'm selling cartridges for $12 versus $75?
It's true.
Yeah, a lot of complexity there for sure. Yeah, I wanted to ask you. I mean, I looked at your LinkedIn profile, and you had an interesting post about how Monster Energy, I guess, didn't like the fact that your logo looked a little bit too similar to theirs. Personally, I don't know how you could confuse those two companies, but what's the status of that?
We decided to cut bait and redesign our logo and let the big guys bully us a little bit. Our first response to them was they basically want to take ownership of 3 lines that are vertical. So we told them you should start with Spotify because their logo is a lot closer to theirs than ours is. They didn't think that was humorous, and so we decided to get more serious about the conversation and get on with it.
Interesting. Well, I'd say going into back into the industry, that's so funny. It's true. Definitely looks more like Spotify. Going back into the industry, what changes are you maybe anticipating? Right. Again, I think the vaping aspect, the hardware aspect that you're growing into, and really seeing, I'm sure, more market share of is seems to be changing. I mean, almost weekly, monthly, right? Just different products, and I think consumers wanting to see and experiment different ways of getting to this product, right? Uh, are you working on any new designs today? And how do you stay on top of all that? I mean, like I said, it just seems to be so many different changes in the hardware aspect alone. How do you work to make sure that you have the next new way of I guess inhaling this product in particular on the top of
Yeah,
mind?
yeah. So first of all, we have an engineering staff, and what they do is they figure out ways to not only make the experience better for the consumer, but also how would that impact our cost of production. And
Yeah.
so we recently filed some patents around how to create basically the easiest way to understand is less moving parts means less labor, means lower cost to produce. So we're constantly looking at things like that. We spend a great deal of time on intellectual property. So everything that is our invention, we make sure that we try to protect. Um, and then as far as the overall industry, let's forget about hardware for a second. I mean, the Banking Act that is set to be voted on in the Senate, I believe, this week, is one that could have a massive impact on the industry as a whole. Because if it does pass, then the traditional cannabis companies can have access to the kind of banking services that companies like ours, companies like yours, could have always had access to.
Yeah. Great point.
You had a really good graphic on your website related to Chinese New Year, which I thought was interesting. I actually think I'm going to share this internally just as kind of an education point where your customers have to get in their orders by specified dates, per product by a certain date in November, a certain date of December, in order to have that manufactured before everyone goes home for Chinese New Year. I'm just curious, do you get a crush of orders like right as those deadlines approach? And is there ever a situation where
We
you have to
do.
sort of pick and choose, or how do you manage that process?
Yeah, we absolutely do get a huge crush. So the way you should look at it is we have basically a 6-week hole blown in the middle of our supply chain that nothing can go in, nothing can go out every single year. And so, like anything, we have people that plan very well and get a lot of supply to get through that. We do ourselves because we've got a visibility from the macro level of how many cartridges do we think our customers are going to need. Then you go down a level and say, well, how many are customized? And then on the flip side, we see a massive increase in orders right after Chinese New Year from the people that maybe didn't plan so well. So we see both ends of it, but it is very unique, not to us, but to anybody that has a supply chain coming out of China, because when we say it's shut down, it's shut down. I mean, it's not just us, it's Apple, it's everyone is shut down during Chinese New Year's.
Yeah. Which I'm sure now going into this fourth quarter is getting busy for you to prepare for that too. So I appreciate, of course, Bill, your time and your insight on this industry. You're right. I think the banking sector question, right, is going to be answered this week too, which could be huge. So hopefully we could have you on the show later on and see how it's changed over time too. But I thank you for your time, and thank you for showcasing to all of us, right, how even the hardware side of this industry can be difficult.
Sure.
Yeah,
Well, thank you
thank you for
both for
me
having
too.
me.
Yeah,
It was
very
fun.
interesting.
Yeah.
Bye-bye.
Okay. Bye. Well, that's all from us. I hope everyone has a great day.